Hey, everybody, welcome to the stream. It was a really good day on Wall Street with stocks going up. I hope all of your stocks, or most of them, went up today. It was nice to see that stocks really rallied and they came back from a huge sell off yesterday, especially toward the end of yesterday. It really sold off. Technology just leaped up. It was a nice day for tech stocks. It was an awesome day, as a matter of fact. And as we look at other sectors, communication services were Meta and Google Play, that also went up, but not nowhere near where technology went. One thing I noticed is some smaller technology companies like DocuSign, even Robinhood, they were flying high. It was awesome. So hopefully you took some of that action and you saw some of your stocks go up. I wanted to go over some highlights of today's trading, and I am open for suggestions. If you've got stocks you want to take a look at, I am happy to accommodate and take a look at those. I wanted to look at a few stocks that I had in mind, and I'll take you through those. Let's take a look at sectors once again. It looks like a lot of things did work today, but again, technology just took the show. As we look at the China trade, it was a different story there, where our friends across the Pacific had a red day. And, is the China trade gonna work? Maybe. I think it still has a chance of working. It certainly is one brutal day. And the China holidays ended yesterday, so they were able to open up their stock market today. So there was a lot of adjusting to do there. So I think that's part of what was going on. And we'll see where it trades tomorrow. And more importantly, where it's going to trade over the next 12 months. I'm going to buy into the China trade principally because I do believe in their economy. Fundamentally, China is important to the world. It's the manufacturing center of the world. They're doing a lot of good things around EVs and technology. So for that reason, I'm in, and we'll see how that goes. I'm not a big investor yet, so I'm dollar cost averaging into positions. It was a good day to buy today. I bought BABA shares, I bought NetEase, Baidu, and I also bought into an ETF, and I bought into Baidu as well. So was glad to buy into those shares, and since they were being discounted. Looking at DocuSign, it had a nice day today, and it was flying even higher today. It was a little bit higher, and I couldn't quite put my finger on why was this stock rallying, other than it's a mid cap. It's a company that I believe is discounted, but it's a mid cap player. It values quite well. I can show you my valuation, and it looks good. So DocuSign was really on a tear. Where did Rod Block settle? It was down. I think Hood was really going up like a rocket ship. Yeah, it went up almost 10%. And why was that? It might be, sometimes these stocks fly up, and I don't know quite why. It's a reasonable market cap at 22 billion. These are two holdings that I have. I don't have a ton of stock in both of them, but I'll show you what I've owned there. Looks like Mike, the dividend investor guy. Looks like OGN. Let's take a look at OGN. I believe that's a spinoff. I forgot their name, but it was a spinoff company, if I recall. Then we've got Neo. So you bought Neo. You bought that ETF. Boy, that ETF really, really went down. Holy smokes. And it's the closure of the market for a week. That's kind of, it's a lot of time to be taken off. Must be nice to be over there and get that time off. But if you look at the FLCH, if we look at the ETF there, it went down 11%. Wow, man. It's already bouncing back though. Okay. But we got a ways to go. It's got to come back a ways to go. Now, it's still been a good trade, man. If you were in this investment on September 10th, you're happy. Okay. It's gone up. You've gone up, for a ride. It's come back down, but let's see where it goes from here. And it looks like Nichix, you bought Mercado Libre, and I think it's still a buy. And I still think it's a buy that Union Bank. Mercado Libre, it's an interesting company. I just think the stock's a little expensive, and I decided to stay in BABA, which I'm glad I did because I owned BABA before this whole China trade took off, and I own Amazon. I've been buying into Amazon as fast as I can. Yesterday, I bought Amazon shares on the pullback, and it rallied today, which was good. So those are the two stocks that I have. Mercado Libre looks good. It's just I'm going to hold off from buying that shares. I can understand you buying it. I think it's a good company, and I hope it keeps going up for you. Mike, dividend investor guy. Yeah, I'm not quite sure what is going on with Robinhood, but they had a really good day. And Hood, Barclays raised price target. And it's interesting how influential like a firm could be. Some analyst says, oh yeah, Robinhood's a good investment. Boom, it goes up 10%. Thanks, Shadow Guy. And good evening to you. Good afternoon, Mike. And then, yeah, there we go. Thanks, Shadow Guy, coming in. And FYI, it was pretty cool. I looked at DLO. DLO was a suggestion that came up in yesterday morning's live stream. I didn't get to it, so I got to it later in the afternoon, created a video, released it, and I think it was Nichix who's on the stream. He gave me a very good piece of information, which was, hey, FYI, they were a part of a fraud or were accused of being a fraud. And then the news was, hey, well, maybe their platform was being used for money laundering. Okay, so that is a negative story, but it was in 2023. I followed it, and it was just more information that I could, take a look at and put into my decision process. So I appreciate the information that Nichix revealed. That's all about community. Like he gave me a heads up, and I did some homework, and then I went over to Tomas, who's actually in Argentina. And I asked him, hey, you're closer to Uruguay. You have any opinion here? And he said he would ask some friends. And he came back and said, hey, everybody loves this company. They love the platform. They think it's the best platform. But he did say that the money laundering piece is what's been ailing the company. So I think there's a little bit of dirt on the company. And I'm going to take my time in buying into it. I still think it's an interesting company. And one thing I would say is, I'm not here to kind of have any companies back. Not doing that at all. I would just put it out there that I could probably go down the list of the most biggest financial companies, and I could show you not too long ago, they committed fraud and the government slaps their wrist, don't do it again. And then they move on. And I think I shared that example in this morning's stream. Bank of America, their people through Countrywide, they were signing documents. And these were fraudulent documents to have people apply for loans and get loans that they couldn't afford. So first, it wasn't the right thing to do. I thought it was just completely destroying people's lives, so to speak. And it was fraud. And they got caught. It was clear that they were doing it. Bank of America paid a lot of penalties, but you look at Bank of America, it's not like we're holding them back because of the fraud they committed, which they, along with a bunch of other companies, destroyed the economy, created a lot of pain for the housing market and so forth. So when I look at a company like DLO now, again, I'm not going to defend them just kind of blindly. I'm just going to say, look, so a company has a little bit of dirt, got it. I remember Meta being called to congressional hearings where they just get roasted. Oh, you're destroying, young people's minds and so forth. So I got to take it, with a grain of salt and kind of do my own homework. I really do appreciate everybody kind of contributing. Don't ever, delay on just sharing your opinion. Hey, I think this happened, so forth. So I appreciate the information sharing. DLO had a good day today, and it's a small cap, 2.64. I do like their regional exposure down in Latin America. I like that about the company. So, all right, let's talk about the company that Mike wants to talk about, which is OGN, Organon. Okay. And these guys were a spinoff. What, who were they a spinoff from? They were a spinoff from a bigger company. They're in healthcare. They do women's health. I do remember them. And let's take a look at their website. Yeah, they do women's health. So they really focus on the things that, women need, certain treatments, pharmaceuticals, and so forth. I think it's a great idea because, when you have focus, these companies tend to operate better. They tend to provide the right products and so forth. So these guys here are really focused. They're a healthcare company. Let's take a look at their financials. I haven't looked at, I looked at this company like 2 years ago, I think is the last time I looked at it. They are growing a little bit. Looks like the quarterly is flat last quarter. Q1 was up 5.4% and then 7.6% the quarter before. Annually, they're doing okay. They're growing a little bit. Okay. When we look at their dividend, nice dividend, 6%. That is a nice, attractive dividend. According to analysts, it's discounted by 18%. 5-year chart doesn't look all that great. And, I like spinoffs, and it's going to kill me if I don't remember who these guys got spun off from. Let me look up who they were spun off from. Nope, didn't see it. So I don't know if anybody else knows, but they were a spinoff from another company. Merck. I knew it was like a well-known company. So Merck decided, hey, you guys could probably do better if you're really focused on women's health, and go operate. So when we look at the revenue, okay, small, modest growth. Okay, looks good. Let's take a look at their cash flow, and then I'll get to the balance sheet. So cash flow wise, so they were cash flowing quite better. And I don't know that these were their numbers when they were public. I think they were spun off a couple of years ago, and they're an $854 million free cash flow company in the trailing 12 months. All right. And so when I look at the quarterly for the free cash flow, let me see how that's trending. So it's been a little bit of up and down, but overall positive. So that's good. So it's a small grower. It's healthcare. I like healthcare. I think it's a really dependable industry. So I would guesstimate, I would multiply this times 15, which is going to get us to about, I'm going to call it 13 billion. And man, they are really low market cap. Their cash flow is really good. At $850 million of free cash flow, they are cash flowing like 20%, close to 20%. That's really good. So this looks really, really good. If we look at their dividend payout, see their payout, they got plenty of cash. They produce plenty of cash. So that looks interesting. So what's the story with the balance sheet? Let's see, make sure the balance sheet doesn't have a bunch of debt. That's going to be a big problem. So cash is $704 million. Total debt 8.6 billion. It's been coming down. They're being painted off. I think they were spun off back here and they've been paying off their debt. Good job. 8.6 billion dollars of debt. What is their EBITDA? Hopefully these guys are below 3. EBITDA is 1.6, not quite. So these guys, the balance sheet scares me, right? If they really focus, they can pay off debt over the course of about 7 years, maybe 6 years, over 6 years, which that's quite a while. 5.5, 6 years. That's a while. So the balance sheet doesn't pass. And maybe that's why the market's saying, well, we don't like it because that balance sheet's bad. I have a lot of choices in healthcare. Healthcare has not been like a top performing sector. It's actually behind technology, but technology, man, it's just been going up like crazy. So having said that, I would say that this is interesting, but the balance sheet disqualifies it from me taking serious consideration of it. And I have other healthcare options, right? I have other places where I can, look at a stock that I think is going to appreciate. Not quite a 6% dividend. That looks pretty attractive, but I got 3M at 6% dividend when it was really discounted. And that was a quality company. And I'm glad I did so because that stock's really moved, appreciated really nicely. And if you look at my investment, I am yielding a 6% dividend on 3M. So I'd rather keep looking for a really high quality company that I could see appreciation on and earn a really nice dividend. So I'm going to pass on Argonon. But Mike, would love to hear your opinion. The balance sheet was my fly in the ointment, or I would say that's what I'm thinking is, fly in the ointment. So you've owned OGN before, good dividend, good equity, then sold. Okay. They are from Merck. Yeah. Yeah. I think there's a lot of choices in healthcare, and some healthcare is like really doing well, like Eli Lilly, but some healthcare, it's due for a really nice rally. Pfizer had a good day yesterday. What did it do today? Did it keep it going? I've been super busy. I did my trades earlier in the day, and then I went off and did some other stuff. It kind of held its nice rally from yesterday. All right, I'll take that. And it's rallying in the after hours. Okay. And this one here, I mean, Pfizer is due, man. It is due. I think it's going to get back to $40 a share, and it's going to be a nice reward in 2025. It's going to pay a nice dividend, 5.76. So this is a really well-known name, right? Argonon, not so much. I'd rather be in Pfizer. That's my choice. I don't want to debate and kind of like say, oh, this one's better or not. But this one is, I think, a good choice for me. And I have some small caps too in healthcare, United Therapeutics and Catalyst Pharma. I love those two. And then one more that I added was a smaller company, which is Solventum, which is a spinoff from 3M. And Solventum, I think, is going to go places, and it pays a nice dividend. So I've got healthcare well covered. I'm good with healthcare, and I'm going to be looking for some of these stocks to really perform. And in some cases, it's a defensive stock, like Elevance Health is a good defensive stock. But I think Pfizer in 2025 is gonna do well. It's going to appreciate in value. United Therapeutics is doing great. Their business is awesome. So is Catalyst. And I think Solventum is really going to go places. I like spinoffs. I like spinoffs because when those companies get more focused, and they usually come from a good company, like in the case of Solventum, it was a 3M company that spun them off. And I thought it was worth taking a look at. Once they had a couple of earnings and I had the data, and I could forecast their free cash flows and their earnings per share, I became a Solventum stockholder, and I'm growing my position. I have a buy on it because I don't own a lot of shares. I'm just at 6,000. I'd like to buy maybe $10,000 to $20,000 of Solventum. I want to keep building on United Therapeutics. I'm up to 23,000. I could be up to 30,000 there. And I'm holding on Pfizer. I'm hoping that they really catch fire and really start moving and can catch up with United Therapeutics, which is up substantially, as well as Catalyst. So we'll see where they go. And then looks like Humana. What's going on with Humana? So you're a little worried about Humana? Yeah. So Humana, geez, man, it's one of those situations where it just doesn't make any sense to me. It's a healthcare payer. I think there was another company in the Discord. I think somebody else said that another company's kind of taking some share away from Humana, and I think that's what's ailing the stock. Is investors are afraid that, hey, if they lose some of their market share, what's going to happen? And I don't know, why the stock is really down so much. If we look at their financials, they're pretty decent financials. It's not like they're a hot mess. They're doing okay. Their revenue growth is there. Let's look at the quarterly. Quarterly's there. I mean, for Pete's sake, man, they're growing their revenues. So I don't quite get why the market's selling them off so much. But, there's going to be, there we go, Clove. And what's the story on Clove, man? I got to look at that one. I have no idea what Clove is. And Clover Health. So are these guys the ones that are ripping up? Yeah, look at that. Jeez, 244. That is a beautiful chart. It's really ripped up. And it's a smaller cap, almost 2 billion in market cap. They're about a 1.3 billion revenue company. No, total revenue is 2 billion, excuse me. But what's the story here? How come they're going from 3.5 to I don't quite understand this. Then the revenue growth is 9.5. So I guess the story around Clover is really positive, but man, that is a lot of red here. This is a rebound. Man, that is amazing that a company that hasn't had like consistent growth year after year is just crushing it. But this is it here. This was supposed to be kind of a game-changing kind of company, a big disruptor. The stock market sold it off. It's a low-price stock. So any movement up is just really rewarding shareholders, as they should be rewarded. You buy $1 stock, you deserve some upside. And because this is high risk taking right here. And whoever's in it, boom, you've tripled your money. Awesome. That is great. But these guys are kind of small. How could they be taking so much market share away from Humana? It's a smaller company. Humana is substantially bigger. Interesting. Guess you got to get into those two companies and understand what the dynamics are of one to the other and check it out. This is an interesting, I would have never bought this stock. I mean, $1 per share, that's kind of scary. I did buy a couple of those in the COVID year because I thought, okay, just COVID, everybody's afraid. So I bought a couple of those. It did work. But outside of that, I just don't take those really high risks anymore. I'd rather just protect my capital and just keep seeing my portfolio go up year after year. So we went over Pepsi this morning, and Pepsi, let's see how they did throughout the day. It was up when I looked at it this morning on the live stream. It ended up 2%. Very nice. This is a really, steady stock. The growth is there. What's the quarterly growth there? I mean, it's kind of not growing, but it's a massive company, right? It's a very high revenue company at $92 billion in revenue. That's huge. Their profitability, pretty good gross profit. I mean, it's sugar water, right? With a little caffeine and food coloring. And they taste great. So their formula is delicious. And so, but these guys here, they pay a nice dividend. People know of this company. I believe might be a dividend aristocrat. So they keep raising their dividends. So people are comfortable with this investment. So the investment's gone up. But what I looked at in the morning was, if you look at the 5-year, it's up 23%. Well, that's not overly impressive. And if you add the compounding of the dividend, maybe that gets you up to about 40%. If you want a safe, steady stock, go for it. Pepsi's right there for you. But I'd rather go after something that's really going to appreciate, something that's going to double in value over 5 years. If I want steady and growing, I'll go put some more money in my bonds. I can pretty much kind of organize 5, 6, 7, 8% returns in bonds, and they don't fluctuate like stocks. And I'll take my chances on stocks. That way I can find the next Robinhood, which I've been an investor in and it's done really well. Coin, Uber, I want to find companies like that where I can see my investment goes up really fast in value, and I can have part of my portfolio be steady Eddie, but moving away from stocks. That way I can diversify in outside of the stock asset class and go into a different asset class like bonds. So that's Pepsi. I think it's a good quality company, but it's a steady stock. If that's your flavor, if that's your desire, go for it. Can't argue with that. And you've been holding Pepsi for a while. Solid future. Yep. And you know what they do? They're going to keep doing it. They do the snack business, which is good. And then remember, Humana had their star rating lowered. Interesting. Okay. So Humana business has been under pressure. All healthcare, I think for 2023, it was bizarre that healthcare didn't do better in 2023. It's done better in 2024. And you have to be a good stock picker, in all things. But when you look at healthcare, when you look at small caps, you have to pick very carefully, pick the right ones. But if you do, boom, bonanza like Clover, right? So you got to really do your homework and pick carefully. When you go names like Pepsi, these are pretty safe. A lot of investors are buying it because they recognize the company. Pepsi, Coca-Cola, been around for 100 years. They can go to the store and buy some of the snacks. I think Alta's saying they have a lot of brands. They certainly do. I think they own Doritos and Frito-Lay, and I'm getting hungry talking about them, but they've got a lot of brands, a lot of snacks. So yeah, it's very consistent business. I get that. And for some investors, that's an awesome investment. So good luck with it. All right. So let's look at Mercado Libre. MELI. What did that stock do today? It was up 2.6%. It's up to $2,014 per share. It's been a good stock, appreciating 62% in 1 year. Over 5 years, you're up 267%. Getting it done, Mercado Libre. It does have a high PE. It does have a pretty high forward PE. And I think as they get bigger, right, you're going to start competing against some bigger fish. Amazon being a monster. You want to lace them up against Amazon, good luck. Walmart, there was a story that Walmart was going to be a threat to Amazon. Right. The whole threat has been for the last 20 years is Amazon taking Walmart's business. Amazon putting retailers out of business. Amazon's a freaking monster. It's such a powerful entity. And I'm glad I'm a stockholder. Mercado Libre, as they get bigger, will have to contend with those companies. Alibaba is a powerful company. So those companies are going to muscle their way into the marketplaces that Mercado Libre has. I still think Mercado Libre is a good company. Look at their growth, solid growth. It's just going to get a little harder. As you get bigger, the law of big numbers comes into the picture and says, it's going to be harder to grow. When you were 3 billion, it was a little easier to grow. But as you get bigger, good luck. It's going to be a little harder. And but they're getting it done. Last quarter, 41%. That's an awesome growth rate. Good job. If we look at their gross profit, decent gross profit. That's very decent considering that they're an e-tailer, a retailer online. So that's really good. Very good. When I look at their cash flow, it's decent, but it doesn't, win any like contest here or any, valuation contest. It's 5.6 billion. It's grown really nicely, but to get to their valuation, $102 billion, you'd have to take that number multiplied times 20. And yeah, I guess you could get there. I have a valuation on it. I can show that to you. And I get to their value. No doubt about it. I was thinking of selling my Alibaba and switching over to Mercado Libre. I didn't do that. I'm glad I didn't do that because the Alibaba shares started to really roll. So let's take a look for Mercado Libre, and I'll show you how I value the company. So right now, I think Mercado Libre is discounted by 16%. It's not incredibly high, but it's not too bad. You know, it's okay. I think it's a quality company. It's outside my home country. It's down in Latin America considerably. So I like that. I like a lot of things about this company. And the free cash flows do value the company. But when I combine it with earnings per share, it just brings it down to 16. And I think that I can do better with Amazon. When I look at Amazon and I look at the valuation of Amazon, I think I'm going to do better with Amazon over time. And I think Amazon's discounted by about the same amount, and that's at a share price that went up today. So if you were going to ask me, I mean, clearly I'm buying into Amazon. I believe in Amazon. It's a known commodity. It's going to be a powerful company for the next 20 years. Their businesses are top of the stack. They really dictate e-commerce to the United States and are very influential around the world. So their AWS business, number one cloud business in the marketplace. You look at their video business, that's going to be kind of a surprise because they've been advertising on Amazon Prime Video, and that's going to be all profit, all margin, beautiful. Go Amazon. So I'm looking forward to their earnings because I think they're going to do well. I think they're going to show how good they are. And I'd rather be buying into Amazon and Alibaba. Alibaba is discounted at 35% at their current stock price. So good choices in e-commerce. Mercado Libre is making noise, but I'm just going to stick with the better known brands or better known companies, Amazon and Alibaba. Alibaba giving me exposure to China, giving me exposure to Asia, and Amazon giving me a really good company within e-commerce, cloud, and also video streaming, as well as other businesses. Amazon has so many businesses, and it's incredible how they could run so many different businesses well. Really impressive. Really impressive. All right, Michael Benitez. Coupang. So what's the story with Coupang? I want to say that I've heard this name, but I just can't place them just yet. So Coupang, together with its subsidiaries, operates retail business through its mobile applications and internet websites, primarily in South Korea. Okay, it's coming back to me. That's what they do. Okay, so in South Korea, this is in US dollars. So the value of the company is 46 billion. They do 27 billion in revenue. The PE this year is 44, but it's jumping up to 90 next year. Woo-hoo. It's a strong buy. It's discounted by 5%. All right. What's it done? Wow. It's down 26% over 5 years. It's up 46% over the 1 year. All right. And revenue growth is there. Okay. And this is in US dollars. Okay, good. And balance sheet, US dollars. Balance sheet, they have 5.5 billion in cash. And they have total debt, 3.7 billion. So they can pay off debt immediately. Good balance sheet. So good cash flow company. They came out of like the negative cash flow era of their company, and now they're a cash flow generator at 1.5 billion. So 1.5 billion growth company multiplied times 20. That's a $30 billion company, and they're selling for 46 billion. So cash flows are going to show that the company's being priced a little too high. And analysts are saying that it's a strong buy, but it's only discounted by 5%. So this one here is not super attractive to me. And again, these guys are a small, these guys are like Mercado Libre. They're regionally in an area that's doing well. Korea has a good economy, interesting economy. But yeah, I think I'm good on e-tailing. And I like having Alibaba because it gives me a lot of exposure in Asia. So yeah, Coupang is Korea, Amazon lookalike. It is, but it's not as big, and it doesn't have maybe it has a cloud business. I don't know if it does, but Amazon has that cloud business. It has the video streaming business. It has a bunch of different businesses that do well. So that's an interesting little company. When we look at the market, right, I still think the market's expensive. That's just a reality for me. And it's getting, it's hard to find, where is there like a honey hole of discounted companies right now? The best honey hole for me is China, and I'm buying into that. But you got to be smart about where to go find value. I think small mid cap companies could really start performing well. So hopefully that's a place to seek some value. Energy was down, and it was kind of interesting to see how the energy prices really pulled back. They were going up, and then boom, they really came back down. They were down like 4% today. It really dropped. So not sure what the heck's going on with the oil complex. So oil prices went down. I know my Chevron stock took a hit, and we'll see where oil goes tomorrow. I'm not showing any futures on oil, but oil really did go down, which was interesting. At the end of the day, the NASDAQ just through technology stocks just took off. The Russell didn't do so much. S&P, because of the big caps, did well, up 1%. Then we have the Dow at 0.3%. So it was a very good day, very good day. What's Asia doing? Let's see. I don't think it's open yet. It's going to open in a couple of hours, so we'll see where that goes. I'm going to keep an eye on it. I'm in particular going to see the Hong Kong exchange to see if it's going to rebound, because it was down a lot. And we'll see where the China trade ends up, over the next couple months. I think it's going to work, and I'm going to keep investing in it. So Michael Benitez. So one of them, yeah. So a hedge fund bought into Coupang. Interesting. And I am sticking to the China trade. And again, I'm still buying, stock in Amazon. I'm buying into American companies, but I'm being selective because it's just getting a little harder. Like, I still buy into Meta. It's my biggest position. I still think it's going to continue to appreciate. So on every pullback, I buy Meta, I buy Google, I buy Uber. I've been kind of holding because I do have a pretty good position at Uber. So I'm still buying American stocks, but I'm looking to diversify. And diversification, you diversify across sectors, but there's also diversification into other regions of the world. I'm thinking of Latin America, Mexico, Brazil, Argentina. How could I play in those economies so I could expose myself to an economy that's growing at a faster rate than the US? And China is going to grow twice as fast as the US. It's going to do well. So based on the economic forecast for China, I think it's a good place to invest. I really do. So I'm going to keep buying into China. And it's been down for 3 years, but we all need the Chinese economy. And just go to Target, look at the shelves, and you're like, everything came from China. You look at key industries like computers, came from China. All these things come from China. So I think China is going to bounce back. And over the long haul, over the next couple of years, I think it's going to return very good performance to stockholders, which is why I'm buying into Chinese stocks. Everything takes time, and I'm trying to make the right decisions. Not every time am I going to get it right. I just need to get it right most of the time and recognize when I got it wrong, get out of those positions and move on. I'll have some positions that do great. Most of them will do great, and that's where I make my money. So I think China is revealing better fundamentals, better discounted stocks for me to pick from. So I'm going to keep investing. That's my story, and I'm going with it. All right, everybody. So it's going to be a quick live stream just to talk about the stock market. It was a down day Monday, an up day Tuesday. I'm good with it. I'm good with the bounce back. Let's see what we have in store tomorrow. I think tomorrow we are beginning to see more earnings. So tomorrow we have, today was Pepsi. That was the big name today. But tomorrow we got, am I looking at this right? So I thought other companies were going to announce. So JP Morgan, why is this not working for me here? Tomorrow we have Delta, we have a number of companies, but this calendar is not showing those. So after the close. So I'm not sure what's going on with stock analysis, but the earnings calendar for tomorrow should have some big players. And maybe I'm clicking on the wrong. So this is Tuesday. Go over to Wednesday. And it's still not working for me. So I could have sworn that Delta's going to announce, as well as some other companies like Domino's. And there's going to be some pretty good earnings tomorrow, good earnings on Thursday, good earnings on Friday. Thursday, here we go. Okay, so it's Thursday when we have big earnings from Delta, Domino's, and then on Friday, JP Morgan, Wells Fargo, the big banks. And then the big banks are going to continue. If you go into Monday, Tuesday, you get bigger banks. And then you have a huge day of earnings on Tuesday. It's going to be huge, man. Got banks in there. You got United Healthcare, Johnson and Johnson. This is huge. A lot of information being flowed to investors. So it's going to be an interesting time to look at earnings and see which companies bettered their position and are probably going to be running, having their stocks appreciate, which companies are being ridiculed because their earnings were not good enough. That's what we have in store. So it'll be interesting to kind of cover it. All right. So that's going to be the live stream for today. Everybody, thanks for tuning in. I really appreciate it. Do me a giant favor and consider becoming a paid member of the community. It'd be great to have you, and there's really nice perks. Look at the details of the live stream. You can get more details on what you get as a member. I'd really appreciate it, and I think you'll really come out ahead if you become a member. Take a look at it and consider it. And everybody, have a good night. Let's see where we end up tomorrow. Let's hope that we have a really nice green day like we had today. Thank you.